Ray Dalio is fresh out of Harvard, the illustrious college that draws ambitious finance graduates from all over the world. And Dalio is nothing if not ambitious. Unlike most at Harvard, he comes from nothing. All he has is fire in his eyes and a dream. It's not long before he's working on Wall Street and rubbing shoulders with the most competitive Type A, money-hungry bloodsuckers out there. And he's never felt more at home. Not only does he survive, young Dalio thrives. His raw talent to predict stock and commodity movements proves useful and incredibly lucrative. With each successful trade, his portfolio of clients grows, so does his confidence. But the more confident he becomes, the wilder he gets. While he gives a lecture at the California Food and Growers Convention, he pays a stripper to drop her cloak in front of the crowd. And when one night he goes out drinking with his company on Christmas Eve, 1974, tensions simmer between him and his boss, and they get into a heated, drunken argument. Who makes the better trades? Who has the faster car? Who has the hotter whatever they argued about, it ended with Dalio slugging his boss square in the face. Flash forward to today, Dalio has built the largest hedge fund in the world and is known as one of the greatest investors of all time. So how does Dalio go from bar brawler to manager of the largest hedge fund in existence? Why does Dalio go on to lead his hedge fund in the most radically transparent way imaginable? What is Dalio trying to teach us in his books and through his extensive online content creation? This is the legendary story of Ray Dalio. Raymond Thomas Dalio grows up in Long Island, New York.
Well, my dad was a jazz musician. He worked late at night, and my mom, loved me to bits. I was very fortunate in that I had a mother who loved me and a dad who had strong character and creativity.
At first glance, Ray's a normal kid. He likes to play baseball with his friends and he loathes school. In his opinion, it's a lot of memorizing and not a lot of understanding. He finds the content abstract, theory with no clear purpose. So from age 8, he sets out to forge his own path to success. The ambitious Dalio does whatever he can, mowing lawns, shoveling snow, and notably working as a golf caddy. As it turns out, this job will end up changing the course of his life forever. The US economy at the time is booming.
Post-war planners know that the United States has today an immense industrial establishment which, if still in operation at war's end, is capable of providing a peacetime level of employment and prosperity beyond anything America has yet experienced.
While most of the world is beginning to recover from World War II, the US comes out of the war relatively unscathed. With its factories intact, the country has never been more dominant, and the surging stock market reflects it. It's all anyone can talk about. Golf greens are well-known hideouts for Wall Street men. Dalio ends up caddying for many, and as they talk about the stock market, he listens carefully. With the cash he saved up from odd jobs, he starts his investing career at age 12.
I took my caddying money and I decided I would invest. I didn't know what I was doing. First stock I bought was a company which was the only company I ever heard of that was selling for less than $5 a share. That was my criteria, because I figured I could buy more shares and that meant if it went up I would make more money. Obviously stupid. But I got lucky. The first company I bought was a company that was about to go broke, but somebody acquired it and it tripled. And I thought this game is easy. So I got hooked.
After his first taste with success, Dalio's hooked. He keeps trading as the years go on. By high school, he already has investments to the tune of thousands of dollars. Out of school, Dalio decides to go to Long Island University. There, he watches as the Beatles go to India. Are they going to play a concert? No, they are there to study meditation from a yogi. Dalio, naturally curious, learns meditation too, and he's surprised by how much he likes it.
Get it? See the giant dragon?
Meditation has given me that kind of equanimity. So I look at things I might not want to happen, but I can approach them calmly and better. It helps you sort of go above yourself and your situation. So it's a big deal. It's been a big deal for me.
This teenage curiosity turns into a habit, one that he'll rely on for the rest of his life, especially when he has to navigate troubled waters, like a warrior stilling his breath as he prepares for war. And a war of Dalio's own steadily approaches. Dalio graduates with a Bachelor of Science but majors in finance, definitively charting the course of his career. He decides to get some experience and spend his summer as a clerk on the New York Stock Exchange. Although he's just a clerk, Dalio's eyes widen as he enters the heart of Wall Street for the first time. It's a hustling, bustling place full of activity. Little does Dalio know, he'll be witness to one of the biggest events of the century.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Richard Nixon does the unthinkable. He takes America off the gold standard. Up to this point, each and every dollar could be converted for a certain amount of gold. Now, the dollar is backed by the same thing as Dogecoin, nothing. When Dalio goes to work the next morning, he sees the fallout for himself. Wall Street is plunged into chaos. Dalio expects a market crash, but instead the stock market soars. Now that the dollar isn't backed by anything, its value slumps. Inflation takes off and everything from gold to stocks suddenly rises. Although Dalio has never seen anything like this in his life, he learns that this has happened before. In fact, he takes the whole summer to study similar phenomena all throughout history. Over and over again, he notices that a currency devaluation ends the same way: inflation. Now the stock market's knee-jerk reaction seems painfully obvious to him. For the first time, Dalio spots a pattern and realizes that the economic machine is really just an amalgamation of patterns.
Though the economy might seem complex, it works in a simple, mechanical way. It's made up of a few simple parts and a lot of simple transactions that are repeated over and over again a zillion times.
If he could learn such patterns, understand them, he could predict how the economy would react to certain events. That could mean predicting the stock market, and that, my friends, means a lot of money. After the summer, he goes to Harvard Business School and gets himself an MBA. Then, he lands himself a job as a futures trader at Shearson, a long-standing New York investment banking and general financial advisory firm.
As respected advisors to the serious investor, we at Shearson American Express recommend you invest your time before you invest your money. Shearson American Express and the serious investor.
During this time, he mostly advises farmers, cattle ranchers about hedging risk using futures. You see, the price of grain, wheat, anything, it's always fluctuating. For a farmer, this is a constant risk in their business. If grain suddenly becomes expensive, their profits take a massive hit. Dalio teaches them about futures, essentially a financial tool to lock in a price for these materials. No more fluctuation and no more nasty surprises. In the background, he's also honing his own skills at trading futures. Although the work he does is important, it doesn't take long before he finds himself at odds with the firm. Dalio feels like the management structure is chafing him. There's constant friction, tensions simmer at Shearson, rising and rising until eventually...
Shut the f*** up!
Not long after, Dalio finds himself without a job, unemployed and kicked to the curb. One can't help but imagine Dalio regretting his decision. He had a steady job, an important one. He was doing what he loved. Maybe he wonders if things could have been different. Maybe he wonders if he should have played by the rules. And indeed, many young ambitious people have this thought from time to time. I too sometimes think, how would my career have turned out if I had taken other decisions at certain points in my life? For example, I was always very focused on a career in finance, but recently tech careers have been looking more and more attractive. That's why I was so happy to come across CourseCareers and give you guys a little freebie. If you want to start a high-paying career in the technology industry but don't have previous experience or a degree, then CourseCareer is here to help. They are replacing college as the modern way people are starting careers, and it's so simple. All you do is go through an affordable online course where you learn everything required to actually do the job. Then they help you land a position by partnering with a wide range of tech companies who are hiring from them. Check out some of their stories of people like Kyle, who went from being a 37-year-old assembly line worker pressing buttons with no degree to making over 150k in a medical technology sales career. Or Dila, who served duty in the military and didn't know what to do afterwards, to making over 100k as a cybersecurity tech sales rep, working fully remote. So great as a side venture too. Go to CourseCareers.com. Link is in the bio to sign up for their free introduction course where you will learn exactly how you can start a high-paying technology career without a degree or previous experience. Even with Dalio's explosive end at the company, there is an upside. Despite his momentary lapse of control, most of the client and network he'd built at Shearson surprisingly stay loyal and decide to stick with him over the firm. If you can make money, who cares who you punch? Traumatized by the rigid structure of corporate life, Dalio decides to open his own company, Bridgewater Associates. It starts from humble beginnings.
Bridgewater Associates was a consulting firm when Ray Dalio founded it in his two-bedroom New York City apartment.
The firm starts off focusing on corporate financial advisory and corporate fund management, and it soon finds its feet when McDonald's signs on as a client of the firm. Now Dalio has spent years researching the various patterns and logic behind the economy. His clients call him regularly on his thoughts on this and that happening in the economy. It eventually bugs him so much, Dalio pens his thoughts on the market every day, the trends he sees in the global markets, opportunities, and so forth. People want his insights so badly, he sells a subscription to his insights, naming them the Daily Observations. It is looking good for Dalio and his young ventures of not only his subscription-based Daily Observations, but also his fund managing Bridgewater.
You see, when you put them together, they destroy.
Bridgewater is flourishing after adding McDonald's as a client, going on to advise more industry titans like Lane Processing, a dominant producer of chicken in the US, as well as pension fund giants World Bank and Eastman Kodak. His Daily Observations are also incredibly popular and boost Dalio's growing reputation in the financial world. Dalio's biggest strength is his ability to hedge risk for these companies. And in 1981, Dalio predicts a financial meltdown. As the economy starts to slow down and markets see an increase in volatility, he concludes that a recession is imminent. Dalio's thesis is based on this economic slowdown coupled with market volatility, as well as American banks overlending to businesses outside the US. Eventually, as the signs become clearer, he grows confident in his prediction. He becomes highly public about his prediction for an upcoming economic crash. He writes confidently in his Daily Observations to buckle up because the depression is coming and it's going to be ugly. Riding high on his early success, Dalio bets the Bridgewater accounts all on a huge recession.
And I couldn't have been more wrong.
This bold prediction turns out to be crushing for young Dalio's Bridgewater and its clients. Instead of an economic downturn, 1982 marks the start of what would go on to be one of the greatest bull runs in US history, lasting almost 2 decades. Bridgewater is in shambles. He tanks the portfolios of his clients, which are set up to profit from a recession and bleed in the bull run. Unsurprisingly, the clients all sever ties with Bridgewater. As the company hemorrhages money, he is forced to do the unthinkable, lay off every single Bridgewater employee. Dalio, the Wall Street hotshot, even has to get a $4,000 loan from his father just to keep the business afloat. The young Dalio flies too close to the sun. Once highly confident in his market predictions to the point of arrogance, Dalio is humbled by his own failure. Bridgewater teeters on the brink of bankruptcy and looks like it may never recover.
The abyss What is your abyss? There will come a time that you are going to have a terrible situation, and how you reflect on that situation, and whether you have a metamorphosis, a change, a personal change. Me, in my case, happened in 1982.
My experience over this period was like a series of blows to the head with a baseball bat. Being so wrong, and especially so publicly wrong, was incredibly humbling and cost me just about everything I had built at Bridgewater. However, this failure would be the turning point in Dalio's career. He himself even goes as far as to say,
It was one of the most painful experiences of my life, but it turned out to be one of the greatest experiences of my life because it changed my attitude about decision making.
Which led me to realize that pain plus reflection equals progress.
failure may be a harsh teacher, but it's one of the most effective out there. From this failure, Dalio shifts his overconfident perspective to one of absolute open-mindedness. He now knows he needs to have his ideas challenged by others in order to learn and make the most sound conclusions possible. To ensure this, the idea meritocracy is born.
Real idea meritocracy, in which the goals are meaningful work and meaningful relationships.
Dalio carefully rebuilds Bridgewater with people that are not only intelligent and qualified, but with people that will aggressively challenge his own ideas to make sure he doesn't get too short-sighted or arrogant with his predictions. With idea meritocracy shaping the future of the recovering Bridgewater, the firm turns its strategy in offering a new fund management product, which would become known as Pure Alpha. Pure Alpha aims to invest in companies that the firm deems immune to market movements. The goal would be to have a beta or a market correlation factor of 0 and instead focus, as the name suggests, purely on alpha or on investment gains that are attributed to factors apart from just market gains.
Bridgewater was a pioneer by being the first firm to separate alpha and beta. Pure Alpha's main investment strategy is to build an optimal alpha portfolio by reducing investment risk through allocating investments among a wide range of uncorrelated assets.
This new product marks as the creation of the modern Bridgewater that we know today. After the launch of Pure Alpha, Dalio also launches another massive product known as All Weather a few years later, a fund that puts managing risk over all else. The strategy is to hold a significant portion of the portfolio in bonds, while highly diversifying the stock portion of the portfolio to minimize risk while still making some gains. Bridgewater slowly regains clients as Dalio's more balanced approach to investing and new products are implemented. The firm is generating steady profits, but is only more or less pacing the market for about a decade. Is Pure Alpha actually working, or is it just tracing the market's general success? The turning point for Bridgewater and for Dalio's redemption comes in 2002 when the stock market dropped over 22%, a staggering amount. However, the Bridgewater Pure Alpha portfolio barely even drops by a few percentage points, proving the effectiveness of the fund in hedging market risk. From there, the firm rapidly picks up massive clients, from US state pensions to major international banks, on its way to becoming the largest hedge fund in the world by 2005. Dalio is back on top of the world, but this time failure has tempered him, disciplined him. Now he understands the importance of making balanced and calculated decisions. A new, wiser Dalio emerges, cautious of not making the same mistakes. Our new Dalio would put his new approach to the biggest test yet, just a few years later. Now the year is 2007 and Dalio's about to make a big play. Despite his missed prediction last time back in 1981, he boldly calls for a recession once again. He and his analysts estimate that almost $1 trillion in debt held by the largest financial institutions and banks in the world were rotten debts, meaning that would likely not be paid back. If he was right, the fallout would be severe. He pivots Bridgewater's portfolios in preparation for a financial meltdown.
We're down by between 3 and 4.5%, 16%, 18%, 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
In the blink of an eye, the stock market craters. Bear Stearns, Lehman Brothers, names thought untouchable, suddenly collapse like dominoes. Unprepared, hedge funds feel the brunt.
Dalio's concerns surrounding the bank's investments in mortgage-backed securities led him to pull the firm out of several large banks, including Lehman Brothers and Bear Stearns, shortly before they both failed.
Yet Dalio has been proven right. Bridgewater clients not only weather the storm, they profit off it, earning a cool 9.5% return while others are steeped in losses. Pure alpha and all-weather work exactly as well as Dalio could have hoped. From there on, the rest is history. Bridgewater continues to generate consistent risk-adjusted returns for investors and holds the title of the largest hedge fund in the world, today valued at an eye-watering $140 billion. However, just managing the biggest hedge fund in history is not enough for a Dalio-level megalomaniac. Dalio strives to gain a massive influence to complement his massive hedge fund, following the footsteps of his daily observations from earlier in his career. Dalio writes several books on macroeconomics and investing over the years, such as Principles in 2011.
And over these years, I accumulated a bunch of principles that helped me be successful, and I just wanted to pass them along.
Central themes include the cyclical nature of the economy and Dalio's corporate management style, two things that we have already seen as being important to Dalio. His team goes as far as to tweet quotes from the books daily. These books exude the wisdom Dalio has today, as the concepts outlined in them are seen as the basis for so much of modern global macroeconomic investing, an investment strategy that has become one of the most prevalent and successful in the hedge fund industry. So if he's so wise, what future trends does the sage Dalio see on the horizon? For one, China.
The United States is improving at a slower rate than is China for various advantages that they have there. They put out about 8 times as many computer engineers, they have free data, and so on.
Despite the recent political turbulence in the country, Dalio has remained a long-time bull on the future of China as a major world economic player. Bridgewater has even taken some serious losses of late on their bets on Chinese firms, but Dalio remains a proponent of a strong China in the future, and the reason for that might be a bit more than meets the eye. Dalio makes considerable efforts to raise funding from ultra-high net worth individuals in China. These efforts are highly successful and contribute to growing Bridgewater's total assets under management value. Is his China bullishness genuine, or is it a ploy to attract Chinese investors? Hard to say, but what we do know is that he is putting his money where his mouth is, as he invests over billions in Chinese companies. However, Chinese stocks are doing worse than ever, given the recent geopolitical struggles. As he watches China struggle, and as Dalio ages into his 70s, he makes what is likely one of his hardest decisions yet. After 47 years guiding Bridgewater through the ups and downs, Dalio finally steps down from the helm of the firm in October 2022. In the world of investing, he revolutionized some investing vehicles and macroeconomic investing. He founded the largest hedge fund in existence, and he did it as the middle-class son of a musician. Undoubtedly an investing genius in the same leagues as other investing legends. And yet, when I look at the story of Dalio, these things aren't the most important takeaways. To me, the most important takeaway is how he thinks, how he sees the world through a different lens, which leads him to radically unique approaches. It's his idea meritocracy, his radical transparency, it's his abundance of insights, or principles for success as he calls them. Principles he's collected over a career of contemplation. That everything is a machine, everything complex can be reduced to something simple and understandable, that truth is the essential foundation to success, that only through seeking out audacious goals and failing time and time again can we succeed and grow. Although Dalio became notorious in the investing arena, his teachings are universal. Remember to go to CourseCareers.com, link is in the description, if you want to start a new high-paying career in tech without a degree or experience required.